All of Wall Street, all the smart money, they know they need more XRP. They only need XRP. They know XRP was created to prevent the next financial crisis, which is why we are starting to see the institutional adoption of XRP gradually but surely explode. CME Group, so the multi-quadrillion dollar derivatives marketplace, plans to launch XRP futures on October 13th, which is about 3 weeks or so away from now. Grayscale recently launched the GDLC, a new ETF giving investors exposure to the top 5 cryptocurrencies, opening at $58, and XRP is the third largest holding. We also saw the first United States spot ETF for XRP launched a couple days back from Rex Osprey, which was the most successful day one launch of an ETF this year 2025, also achieving 5 times more volume than any XRP future ETF did on its first day. So in short, institutions, they want to leverage XRP, they want to actually own it. And to give you an idea of the sort of Wall Street institutions that are eager to get some XRP, who want XRP, here's a short list of some of the institutions who will be attending the Ripple Swell event in November this year. And it's a very big event that's going to give so much more adoption and demand to XRP. You got NASDAQ, you got BNY Mellon, who is now a custodian of the RUSD stablecoin. You got Citibank, BlackRock, Fidelity, Franklin Templeton, JP Morgan Chase, CME Group, Moody's, very big one there, State Street, DBS Bank, and there are still many, many more that are yet to be announced. These are the world leading institutions, the most powerful companies that control our lives from center stage in the spotlight, but also from the shadows, and they are all lining up to talk at Ripple Swell. They all want XRP. Why? Because XRP is the solution to all of our problems. Wall Street know this. And the European Central Bank President Christine Lagarde knows this as well. She just recently confirmed in a press conference that the next financial crisis is imminent. And the only thing that can really be done to prevent it is to lean on these technological changes that are rapidly evolving, to incorporate the use of AI, to use stablecoins and blockchain technology, so effectively to let XRP and its technology Ripple to take its rightful place to save us all. There's some very closely here.
The next financial crisis. And the question mark is intended to express that we're not trying to trigger, to provoke, but to actually do everything we can to anticipate, prevent, and examine what the circumstances are that would actually trigger such a crisis. And I think we must keep 2 points in mind when thinking about the topic. First, throughout the post-war era, the global financial system has been in constant transformation, and the pace has only accelerated with advances in technology. And second, what appears new often simply reflects old risks, except with a different costume and in a different form. And here I'm reminded of Professor Carmen Reina and Kenneth Rogoff's and their history of financial crisis. This time is different. The book's subtitle tellingly is, not it's different, it says 8 centuries of financial folly. After 8 centuries of experience, I think it's fair to say that this time it is never different. And that is why research plays such an important role in helping to safeguard financial stability. Through rigorous analysis and a solid understanding of the past, research helps us see how innovation advances and reshapes the economy, while also bringing potential risk into sharper focus so that policymakers can address them proactively and hopefully anticipate them and prevent them. Research is particularly vital in helping us to understand the implications of the profound transformations that have reshaped the financial system since the global financial crisis, which is a relatively short span of time if you look at the 8 centuries on the one hand and, the 15 years or so on the other hand. And one of the major structural shifts in the financial system over those past 2 decades has been the growing footprint, not so much of banks, but of non-banks financial institutions.
Now, as you heard, she of course did not name drop XRP, but why would they? And also, you could argue, how does this relate to XRP? Well, did you know that Ripple and XRP have been documented on 2 separate occasions now. 2 occasions. As the new solution designed to prevent a crisis of similar magnitude, to prevent a global debt contagion similar to what happened in 2008. Not Bitcoin, not Ethereum, not Solana, not ADA, not anything else, only Ripple and XRP was created as the potential, if not definitive solution to prevent a crisis of similar magnitude. When Christine Lagarde's talking about this here, she is indirectly hinting at XRP. It is not a coincidence that Ripple have been meeting, that they're part of the Digital Euro Association. So Christine Lagarde knows about XRP, not to mention that Ripple has been a part of meetings with many governments all around the world for years and years and years, closed-door meetings, their name being dropped in numerous working papers and research documents, policy summits, you name it. XRP has been guiding the global elites out of the hole they have dug and aim to prevent a financial catastrophe. This is what Ripple's co-founder Chris Larsen states in this interview. And this is why the value of XRP is currently valued at $2.98, down roughly 0.12% on daily time. XRP cannot remain dirt cheap. It was cheap at 50 cents. It's even cheap now at $3. XRP is going to explode and make us early holders extremely rich. Listen very closely here to Chris Larsen.
Years out on the financial crisis, we still don't have the infrastructure perhaps to prevent the next one. And I think this is where digital assets can really help, because an efficient digital asset can really solve some of the key problems in global liquidity. You know, the world's got trillions and trillions of dollars tied up in liquidity just to get around how clunky the movement of value is around the world. If with a really efficient digital asset, something like XRP, again, that's what we believe will be the most efficient, you can now reduce trillions and trillions of capital from being tied up. So you can make those transfers instantly as a bank or as a payment provider or as an enterprise without having to have money pre-positioned all over the world.
If we knew in 2008 that a failure of Lehman Brothers would have only triggered $9 billion of market failure, we could have let it fail. Or we could have bailed it out, the government. Or the government could have put it up for sale. There would have been policy options available that were not available because of the lack of transparency. And here's the point I want to make. It was not longer after the failure of Lehman Brothers that I read the Satoshi Nakamoto white paper that proposed a basically global internet ledger of all the recorded transactions. If all of the exposures of Lehman Brothers had been on a digital ledger, we would have known in real time. And guess what? There wouldn't have been a crisis.
Yeah.
Because we would have had crises caused because of the fog of war. Nobody knows where the real exposure is. If all the exposure was written down on an immutable ledger, we would have known, and we could have taken steps to avoid a crisis.
The attribute of a healthy liquid market is really resilience. And that is getting at the ability for a market to recover from a significant systemic event.
That's why I hold XRP, and that's why I'm so involved in crypto, because I see what's being created with crypto before our eyes. So to find out more, to stay more locked in and up to date, to get ahead of the new financial revolution happening before our eyes, check out the VIP group, what.com/coinfactory. From Alpha institutional research documents, educational courses, trade alerts, and so much more. Check it all out for a 7-day free trial. Links down below in the description. And remember, as always, don't look short term, think long term. And I'll see you in the next one.